Hi everyone, and welcome to Boothy Bites with the Lydian CEO himself, Mr. Chris Booth. How are you, Boothy?
Hey there, Jackie. Yeah, excited to be here in May. I can't believe where the time's going anyway.
I know. Next month we're gonna be halfway through the year, which is gonna be mental. But anyway, so the RBA, the
My
next
birthday's
meeting
June,
is.
Jackie, don't forget.
Oh, is it? Okay, I better quickly write that down. Boothy's birthday. So, RBA next meeting being the 20th of May. What are you predicting with the announcement coming out of that meeting?
Yeah, so it's interesting. I mean, we've had all of the, I suppose, the volatility and the friction with regards to, Donald Trump and the new president impositions on tariffs and, Ukraine and all sorts. So seems like it's been pretty crazy. And that really has put a bit of a uncertainty in, our economy and what next for our economy. And I think really that is something which is going to kind of go to work out through the next sort of 6 months with regards to, what the RBA decides to do with interest rates. I think more importantly now, the RBA's clear-cut decision is based around the inflation being back in that 2 to 3% band, and they have the ability now to then share a little bit more of the cash rate and cut 25 basis points. Interestingly, some of the bigger banks are talking about 50 basis points, but I think they'll probably be conservative and do 25 now, and then there'll be another 25, I think, in June as well. But I definitely, we're on the trajectory down, which is great, especially for home borrowers, and that extra sort of 25 basis points that's going into people's pockets with home loan rates will then will ease that sort of pressure on household budgets and things, which is a really cool thing.
Yeah, definitely. Now let's jump into some of those lender rates. So, which ones have caught your eye this month?
Yeah, so just before we go there, I think one of the things I would say just is with the banks, when the interest rates do come down, what the banks try to do then is sort of share a little bit of the cash rate benefit to the borrower. So really this time and this sort of cycle is very important to make sure that when and if the RBA reduce the 25 basis points, that their banks are actually passing on the full amount of that 25 basis points, which is only fair, right? Now, we have had many cycles whereby the banks have actually reduced by less than the 25 basis points to claw back their net interest margin. It was interesting the other day, like a couple of big banks are really focusing on what their margins are for lending because they deem that they've got all this profit to share with shareholders. They really forget about the social conscience side of things of running a bank to look after mums and dads as well. So yeah, really beware right now. I think we are going to see another 25 basis points. After the last cut, a couple of the lenders didn't pass on the rate cut to borrowers, so we've been working with those guys for reviews and making sure that we can find a new home with better interest rates for them. But this is a cycle which definitely the banks will start to share a little bit less than the RBA give, and therefore we need to be on the front foot to fight for better interest rates. So definitely a good time to get a broker review. But on the interest rate, interestingly, we are sort of banking the discounts of the RBA already, which is great. So what that means is that the sort of forecast for interest rates is lower, and then the banks are sharing the benefits of those discounted rates via fixed rates. So I think last month we mentioned Macquarie Bank, and they've got some amazing fixed rates right now, but their 2-year fixed rate is down at 5.19%, which offers great value to people if they're looking to fix, maybe part or some, but maybe not all, because obviously the trend is still lower. But certainly to get some cash flow certainty right now, 5.19% I think is an attractive rate. And then one of the biggest lenders that we're sort of working with right now, as well as Macquarie Bank, would be Bendigo Bank. So they really recently changed over their brand from Adelaide Bank as well. They're being very, very competitive with their home lending rates. They've got a 5.69% variable rate for home borrowers, which is pretty cool. And if you want an offset there's 5.74%. So you can get like a full package product with Bendigo at 5.74%. So they'll be two of the sharpest rates for home borrowers. Our investors, Movebank, they're in there with a P&I variable at 584, which I think is a great rate. And then we've got probably the interest only lenders. They're probably 20-25 basis points a little bit higher. There is a great cashback offer with ME Bank as well, so they're at 614. That's an interest only product with a 3,000 cashback. So if anyone's interested to sort of cover the cost of refinancing as well and wants a bit of money in their pocket as well as a cheaper rate, that's certainly one to consider. And then lastly, I would say the AMP fixed rate for investors, which is also interest only, for 2 years fixed is 5.59%. So that's a really discounted rate, but also you get the benefit of interest only for the deductible debt too, which I think is a real benefit. So yeah, that's kind of a snapshot. And I think watch this space. As soon as the RBA cuts rates, We're going to have lots and lots of messages from the banks on what they're doing, and also I think we'll get some updates in commentary, which will then dictate, where and how many cuts the RBA will be doing in the future. Like I said before, some of the big banks are thinking sort of 50 basis points, which is a lot right now. But I think maybe 2 or more interest rate cuts are on the cards.
Yeah, great. So many options and still so much to come. So stay tuned, everyone.
Yeah.
So now let's finish on Lydian HQ. Can you talk us through Lydian's latest service offering, Lydian Private?
Yeah, so we're really excited. I think, often with these, so I suppose talking big picture, Lydian has got a service proposition to support financial planners, and a lot of financial planners, they work in what's called the wholesale or high net wealth individual space. And typically a lot of those clients, even though they may not sort of have traditional home debt and things, they nonetheless have working debt, so debts to purchase investments and things like that. So, we want to offer a service dedicated to that sort of high net wealth space, supporting the advisors who are looking after clients in that space. And we've got 2 great people who can support the service proposition that Lydian wants to deliver for Lydian Private. So we've got Sal and we've got Josh, and lots and lots of experience in private banking. I think the connections for lending with the private banks is a real niche thing. It's not like doing, a normal traditional home loan through like a Macquarie or a Bendigo and things like that. The credit policies that are available within the private bank are quite niche, and also the ability to lend is quite different as well. There's lots of nuances in that. So we're really excited to get Sal and Josh on the road, educating some of our advisor offices regarding what's available in the private bank suite from a lending perspective, and then going out and supporting their clients with some loans. So and it's great to have a different colour for the Lydian line as well. She's looking fantastic. He's looking fantastic because he's got the mane right. I forget, but he's looking fantastic with a bit more of a sort of a mahogany and a violet sort of colour as well, a bit more deep and dark. Mysterious line. Yeah. Wow,
mysterious. Yeah. Love it. Well, any version of the Lydian lion, we'll take it. We love it. And I guess that is everything for Boothy's Bites for this month. So thank you, Boothy, for your time. Thank you, everyone, for watching, and see everyone next month.
Yeah, excited to see you in June after my birthday. Ciao, ciao.
Woo! See ya.
See ya.